You're listening to Peter Lewis's Money Talk.
Good morning, this is Peter Lewis welcoming you to my podcast Money Talk for Tuesday the 28th of March. In some of the top business and finance stories today, China's industrial profits slumped 22.9% in the January to February period compared to a year ago, as factory activity struggled to recover from the slump caused by pandemic disruptions. China's industrial profit of around $129 billion for the latest period marked the steepest decline since April 2020. And one of the world's largest shipping groups, Maersk, said China's consumers are still stunned by COVID disruptions and the economic rebound is weaker than expected. Vincent Clerc, the new chief executive of the world's second largest container shipping group, said when we started the year, there was this hope that as China reopens after COVID, we would see a really strong rebound. I think we've not seen it yet, he said, and he drew parallels with the outbreak of SARS in 2003. US regulators announced Monday that First Citizens Bank will buy much of Silicon Valley Bank, the lender that specialises in funding tech startups and their investors, that collapsed earlier this month. The deal includes the purchase of approximately $72 billion of SVB assets at a discount of $16.5 billion. The Federal Deposit Insurance Corporation said yesterday the estimated cost of SVB's failure is $20 billion. And the World Bank warned yesterday that the global economy is in danger of suffering a lost decade of growth, which would be even more severe if the current financial turmoil sparked a global recession. On today's Money Talk, we're joined by Asian fund management industry consultant Stewart Aldcroft, James Wong, Chief Executive Officer at Cathaysia Securities, and our US economics correspondent, writer and broadcaster Barry Wood. On Wall Street Monday, US equities built on the past 2 weeks of gains to close higher. Regional banks rebounded after the Silicon Valley Bank deal. The S&P 500 was up 0.2% to 3,978. The Dow gained 195 points, or 0.6%, to end at 32,432. The Nasdaq Composite, though, finished lower by 0.5% at 11,769, capping a 2-week advance. Regional banking shares staged a broad-based rally. The KBW Regional Banking Index rose 0.6% after climbing more than 3% earlier in the day. And First Citizens Bank shares surged almost 54%, its best day since 1990, after agreeing to buy much of SVB. Hong Kong shares were the worst performers in the Asia-Pacific region. The Hang Seng Index dipped 348 points, or 1.8%, to 19,568. The Hang Seng Tech Index tumbled 2.8%, and in mainland China, the Shanghai Composite fell 0.4% to 3,251. And futures markets are pointing to a fall of around 67 points, or 0.4%, for the Hang Seng at the open this morning. US Treasuries sold off on Monday as investors' concerns over the banking sector eased. The yield on the policy-sensitive 2-year US Treasury was up 24 basis points to 4.02%, but it's still trading close to 100 basis points below the Fed funds rate. And the move continues a run of extraordinary volatility in the bond markets. For the 12th session out of the last 13, 2-year Treasury yields have moved more than 10 basis points a day. And that's a run of wild swings not seen since 1981. Elsewhere in the markets, Brent crude oil surged over 4%, while US natural gas contracts tumbled to their lowest since February and are down 23% so far this month. And you can get more details on the latest market movements on my daily blog at peterlewismoneytalk.substack.com.
Every Monday to Friday, this is Peter Lewis's Money Talk.
And it's time to welcome our Tuesday morning guests. We have with us Asian fund management industry consultant Stewart Aldcroft. Morning, Stewart.
Good morning, Peter.
And also with us James Wong, Chief Executive Officer at Cathaysia Securities. Morning to you, James.
Good morning, Peter.
And over in Washington, D.C., we have our US economics correspondent, writer and broadcaster, Barry Wood. Great to hear from you, Barry.
Good morning, Peter. Thank you.
So, Stewart, every time we speak, it seems like another bank has either gone under or about to go under. We had a couple of weekends ago, 3 US banks fail. Then last weekend, or the previous weekend ago, we had Credit Suisse taken over by UBS. And then this previous weekend, concerns over Deutsche Bank. Doesn't seem to be any end in sight, does there, to this turmoil? But it does seem like it's a bit of a stretch to think that maybe Deutsche Bank is under threat.
Yes, I agree that it is a stretch, but Deutsche has for a long time not been the darling of the markets, as they say. And for many years now, we've had many people commenting about different weaknesses of Deutsche. And so any opportunity to force it down a little bit further seems to be being taken, especially by the media, for some reason or another. But I think you're quite right. I don't think Deutsche is in the same sort of difficulties and nothing like the same sort of difficulties that we've seen with Credit Suisse, and certainly not the same as the various American banks that have gone down recently. Certainly, I think it very likely that there will be a lot of support, particularly in Germany, for Deutsche. So I would be a great deal less worried about that. But the banking sector as a whole is under a lot of pressure from markets, and I think that any excuse to have a series of negative comments is taken up by the media very rapidly.
Is there any sort of reason to be worried? Because the thing is, you're right, Deutsche Bank is a profitable bank. It has good capital adequacy ratios. But I suppose the problem is when investors lose confidence in the banking system, none of that really matters anymore, does it? It all seems to go out the window.
No, and that is partly the problem. There's always reason to be worried because we don't live in a world where everything has got a cast iron guarantee. That doesn't exist. Well, possibly in China, but not necessarily outside China. But I do think that we have to be a little bit wary of some of the commentaries that we are seeing in the media too. I don't think we should always believe everything that is written there. And particularly when it is seen to be weakening. But remember that some of this is also being stimulated by analysts and stock traders, particularly those that want to go short on a stock and therefore try to make a profit by causing their share price to go down a lot. And that has certainly been the way with some of the banks and many other companies too. It's not just the banking sector that suffers like that. It'll be other industries as well.
James, when you sit here and watch this from Asia, do you agree with Stewart, first of all, that maybe China's banks do have rock-solid guarantees from the government behind them and we shouldn't be worried?
Yeah, I believe that. And I can say the same about banks anywhere else as well. And I think the Deutsche Bank... if there's anything happening to Deutsche Bank, Germany is gonna come out and bail out Deutsche. So that's not really anything that we need to worry about. But the scale and the breadth of a crisis happening in an investment bank and in a commercial bank is vastly different. And in terms of CS, we can see for one weekend. People were talking about CS going under, and then for the next 2 trading days, people were talking about cocoa bonds and their AT1s. And I remember being pretty scared for that Monday after CS was going under, or CS was being bought out by UBS, because back then, in that same afternoon, every AT1 bond in Asia markets has halted trading. In Hong Kong, in Thailand, in Japan, there was a quote on Bloomberg, but those were fake because no one was actually trading them. And there were some small to medium banks that were offering 0% LTV ratios. So basically, their risk control departments are creating risk for the downfall of CS. So that's the one thing that I was worried about for Deutsche. If there's anything happening to Deutsche, the products and its bonds that might be used as collateral for other products could cause some kind of chaos in the market. But again, if anything happened to Deutsche Bank, I'm pretty sure Germany is going to come out and bail it out.
I entirely agree with that, James.
Barry, you're in the eye of the storm over there. Tell us a bit, first of all, about First Citizens Bank that's just bought most of Silicon Valley Bank. I don't really know an awful lot about them.
Well, I don't think very many people do, and I must confess I don't either. It's based in Raleigh, North Carolina, which is some distance away from Charlotte, which is thought to be, the banking center of the South. In fact, Bank of America, after some of the mergers following the 2008-9 crisis, moved its headquarters from San Francisco to Charlotte. But this is a Raleigh bank. They are known for picking up distressed assets. Mm-hmm. And as you mentioned at the top, Peter, this stock price has soared. So they think they're getting a good deal. I find it interesting in the context of the Federal Deposit Insurance Corporation when Mr. Martin Grunberg says that the loss to the FDIC is $20 billion.
Now presumably,
Treasury Secretary has been so careful to say there's no bailout. There's no government bailout of these West Coast banks, the two that are in trouble, the one taken over. So I don't know. I mean, I'm sure that the Treasury Department is happy that they found a buyer. The market certainly liked it initially. What about First Republic? I see that's the San Francisco bank that has been in trouble. Their share price was up, 11% today. So I must say, if I can just jump to the broader question, I give the Insurance Corporation and particularly Treasury Secretary Janet Yellen and Jay Powell at the Fed very high marks. I think so far they've contained this problem. I'm not sure it's a crisis. And let me ask James and Stewart, who are experts in this. Do you think this crisis in the States has peaked and is now going behind us?
Barry, I don't think it has, no, because I think this is there's a contagion effect going on at the moment. And it wouldn't at all surprise me if there aren't a lot of analysts out there just going over many other bank balance sheets to see which one they think they can short next. I think part of the problem, and this is the same issue that has occurred in Europe in 2008, and 2000 as well. A part of the problem is that there are probably far too many banks. Many of them are small banks. Many of them are sort of country and regional banks. And so with so many out there, this is in America, of course. With so many out there, it's inevitable, probably, that there will be some that are not going to survive this crisis, and they will be a suitable target for those that have better assets, better capitalized, and better managed.
James, what do you think? Do you give high marks also for the way it's been handled?
Well, I think if we are judging from the FRAOIS spread, the 3-month spread, we can see the time that the market was most scared was when SVB went down, and after that, even there was news about CS, there was news about First Republic. The FRAOIS spread was not as high as when the SVB went down. So it went from a single-digit 3 to a reading of 60, and then went down to 40, and then after CS went up to 50. It's now around 40. So from that reading alone, we can see that the chaos or the contagion is pretty much under control. But I think the only thing that the market needs for the contagion to be reignited is another rating agency downgrading another bank, because it's pretty obvious that running a balance sheet for banks right now is getting extremely hard, and duration management at a environment where rates are high at higher for longer it's not just as easy.
I suppose. Sorry, Stewart.
One other thing I would just add to this conversation, if I may, Peter, is that in the US, as you've highlighted, First Citizens was having bought up the SVP branches, has suddenly been re-rated upwards because of the potential profit that they are likely to make. FDIC having, in effect, guaranteed the assets. They bought the bank. They bought the SVB at a big discount. But I think that this is going to be exactly the same thing that people will find with UBS and Credit Suisse eventually. I think that we will find that UBS will take a look through the assets of Credit Suisse, see what they can sell off, and they'll probably make a lot of money out of it. There are certainly quite a few assets that I think we can immediately look at, which are worth as much or more than they've actually paid for the whole bank. So, this is what it's all about at the moment. It's having the confidence of the market to run the bank properly and get better yields, better returns from them.
As Warren Buffett has often said, the time to buy is when everyone else is afraid.
Yes.
Yeah.
Well, actually, it was John Templeton who said it first, but Warren Buffett then changed it for his own purpose. Yes.
I suppose, Barry, the next stage of this is going to be casting around for who's to blame and what needs to be done to prevent it in the future. So there's going to be a lot of focus, isn't there, on the management of these banks like SVB, like Credit Suisse, and in particular their internal risk controls. And I suppose there's also going to be focus on the Fed as well in terms of, did it take its eye off the ball in terms of regulation, and do the regulations need to be tightened going forward?
Yes, you're absolutely right. And this is going to happen quickly because this week in Washington will be the first in a series of hearings on what happened with SVB. And the former chief of that bank has escaped. Wait, that's my word. That's wrong, of course. He probably just had a house in Hawaii, but he's in Hawaii. He's, of course, no longer the chairman, the president of SVB, but he's going to come under a lot of criticism because of his lack of proper risk management. And in fact, they didn't have any risk management person active in the bank for the past year. So I think they are going to go after SVB. It gets a bit complicated because that is a bank that is very politically correct. It has had everything right in terms of doing things on the environment and inclusion and diversity. So that'll be interesting. But Elizabeth Warren, she's got her weapons ready to go after them. Michael Barr, the Federal Reserve chairman in charge of banking. I mean, I've got his title wrong. He's the vice chairman of the Fed. He's going to be testifying before the Congress. So, yeah, they're going to go after that. But I think first they've got to wrap up this First Republic thing because that isn't resolved.
Do you think they'll be focused on the Fed as well, first of all, in terms of regulation? Did it take its eye off the ball? And also, do you think people will be looking at the Fed and saying, well, maybe, you are the root cause of this because you were too late in responding to signals that there was surging inflation. And then when you did respond, you had to really slam on the brakes, raising interest rates 500 basis points in just over a year. And that's the root cause of this problem.
Oh, is that for me?
Anyone? Yeah, James, you chime in.
Yeah. I think Fed actually responded pretty quickly this time for working together with Treasury to come up with $25 billion to save the uninsured deposits for SVB. But yes, if we go back in time and when found out the period when Jeremy Powell defined inflation as temporary, that was a really big mistake. That was something that everybody knew that was wrong. But then there was nothing that we could do to correct them. But then there was this huge inflation, and I think the way that he hiked interest rates were not that wrong, and the way that he handled these crises were pretty effective. I think Jay Powell had his way with the market, and he learned how to at least somewhat manipulate the market sentiment better than Janet Yellen ever did. So
I think you're absolutely right on that, James. I
Yeah.
really agree with that. I think that this low-key approach from those three key players, the head of the FDIC, the Fed, and Treasury, has been effective so far. Jay Powell in particular, he only spoke on the crisis last Wednesday when he had his press conference. And by the way, I think it was rather courageous for him to go ahead on the interest rate rise that he did. So I think Treasury is hoping, and Janet Yellen is the key player. She too has been very low key. Their major concern is to avoid a massive kind of bailout, a need to step in, because they've already said they will step in if there's trouble in the banking sector that affects another bank. And that hasn't happened yet. So we'll see what happens. But so far, so good. At least that's my reading.
Yeah, I agree with all that. I don't think the Fed is to blame, Peter. And in any event, they were very clear in flagging interest rate rises. So it is the mismanagement of many of the assets owned by the banks that's probably more to blame for these problems.
Well, let's turn our attention to China. Premier Li said yesterday that China will remain open no matter what happens and maintain steady economic growth. He was addressing the China Development Forum in Beijing, and he said we will align with international economic and trade rules that are of very high standards, expand our opening up in a steady and systematic way, and strive to create a first-class business environment that is market-orientated, rule of law based and internationalized. And China's Commerce Minister Wang Wentao told delegates at the same forum that China wants foreign companies, including those from the US, to continue to invest in the country. And Vice Premier Ding said opening up to the outside world is an indispensable major national policy. So, James, we've had this development forum going on in Beijing. We've got the Bao Forum starting today, haven't we, which is sort of China's equivalent of Davos. A lot of focus now on trying to reassure foreign companies to come and stay in China, and also trying to promote a much more business-friendly image, particularly towards private companies.
Yes, we would like to see how that goes. Yeah, because right now, according to an article from Bloomberg yesterday, Americans have not been interested in investing in China. I mean, put China in the top three regions of investments for the past 3 years, and it's for the past year, and it's the first time in history that Americans are not that interested in investing in China, and there are about 15% of the European companies that were invested in China pulling out. And yes, I think China has a strong initiative or desire to draw these investments back. And I think they are making efforts. I think people are more open to the idea of China being reopened. And I think that's a good development. But we would like to see how far that goes.
James, yes, I think
Go on, Barry.
I'll just jump in if I can. I think you're absolutely right, James, that people are in this country, the States, are very reluctant to be seen as putting their money in China. Yes, Tim Cook is in Beijing now. That probably is not a surprise given Apple's really intense relationship with China. But what happened last week with TikTok and that poor chairman from Singapore who testified for 5 hours and was targeted by every member. There is an environment here in Washington that is so profoundly anti-China on security grounds that I think it's shocking. And the business community will be very slow, I think, to move back towards China in a way that they can see would hurt them publicly here in the States.
Yeah, I think that it's what's going on in Washington as far as China is concerned is quite damaging for the relationship. You're quite right. I think what you've got to remember, Peter, with this particular issue and the Bao Forum, this is Prime Minister Li's first opportunity. This is the new Prime Minister Li Kang, I think. And this is the first time he's been able to start talking on the public stage to the rest of the world. And so he's come up with some, what I would regard, very positive statements very much more looking towards a positive future rather than a negative future as China continues to open up to the rest of the world. And I think this should be seen as a much more positive sign from a new prime minister in China, who probably wants to make a name for himself. He's had quite a few years of pupillage, so he's got the opportunity now of leading China into a new sort of new era, new existence.
James, there's an interesting side story to all of this, and that's Jack Ma. He's been seen back in China now after an absence of 3 years. He was visiting a school in Guangzhou, where Alibaba is headquartered. It seems that the Chinese government has been sort of expending quite a lot of effort to persuade him to go back, because it is the one glaring thing that sort of cuts against this effort to be business friendly and to encourage entrepreneurs when you've probably driven your biggest entrepreneur out of the country. So is this significant?
I think it's entertaining, and it's especially entertaining when you observe the news flow of how Jack Ma was observed inside or outside China within a single day, and that reflects on the stock price of Alibaba. That was extremely entertaining, and there was several stories about him refusing to go back to China and was focusing on agriculture. And then there was stories about him being spotted in a tunnel in Hangzhou. So I think we are at least we were told now that he is actually in China, and I think that's a good news for entrepreneurs, especially the first generation entrepreneurs who built up the enterprises that is now actually dominating the Chinese people's lives. And so they can basically, if we're looking at Alibaba, Baidu, Tencent, all these enterprises has been run by professional managers and second generation professional managers. They're founders. Or all of their funders, except for Meituan, stepped back. So people can know now, even if you step back, even if you've given up power to professional managers and provides profits for the country, you can still live a pretty good life inside of China. I think that's a positive message.
I think what I'm amused by, two things. First of all, apparently Jack Ma spent the weekend in Hong Kong, but it was only once he got to China that it made the news, especially in Hong Kong. But secondly, it's probably more important, not the fact that he's gone back to China and he's doing a few things in China, it's what he'll do next. Will he be allowed out of China after this visit to go back to where he may have been living, which many people believe is in Thailand recently. So I think let's see what happens. Don't allow too much of the rhetoric to get in front of us. But I think it's whether he'll be allowed to leave China at the end of this visit, which will also be quite important. But I agree with what you're saying, James. It's a little bit of a public show going on at the moment. Yeah. Let's see what happens next.
Barry, you mentioned Tim Cook of Apple, the CEO of Apple, being in China, and he was talking about the symbiotic relationship that Apple has with China and how they've both grown together. Is Apple an exception in terms of its access to China markets, or is this what's going on in the US? Despite the sanctions that the US is putting on a lot of Chinese companies, there are still business people like Tim Cook who are going out to China and doing business.
Absolutely. And we're joined at the hip. I just believe that passionately, that the business relationship, the trade relationship, nothing is changing. And I don't think it will change. And, Tim Cook of Apple can say all he wants about, I'm using ear pods now. I noticed that they're made in Vietnam. Well, that's a small product for Apple. Most of the Apple assembly, take all of it, for Apple phones, for laptops, for iPads. They're all assembled in China and then sent all over the world by FedEx and UPS from China. So that relationship is not going to be Tim Cook's presence in Beijing. You could say is courageous because there weren't very many other Americans there, I understand. But Tim Cook and Elon Musk of Tesla These are real people who are deeply involved in China.
James, it's quite clear that business generally has an entirely different relationship with China than politicians. It's not unusual. There are many other American firms that are manufacturing in China, including autos as well. So Ford have got a factory there, and some other, Chrysler, I think, has got a factory. But there are lots of American businesses that are still manufacturing in China, exporting to the US and around the rest of the world. So the business relationship is generally harmonious. It is the politicians that are the ones that are causing the problem. And they seem to like to stoke up the problem rather than let it fall away.
James, finally, I want to ask you about the economic recovery in China. Yesterday, one of the world's largest shipping groups, Maersk, said China's consumers are still stunned by COVID disruptions and the economic rebound is weaker than expected. Vincent Clerc, who's the new chief executive of the world's second largest container group, said when we started the year, there was this hope that as China reopens after COVID, we would see a really strong rebound. But he says we've not seen it yet. I'm wondering, is that chiming at all with what you're seeing up on the mainland?
I think Maersk was talking about the cargo ships and the logistics demands, and that's pretty much sure not recovered just yet. And if we're looking at January and February figures, it's not pretty. And but that's the thing that most of us has anticipated, because we've known that the three engines that is driving the Chinese economy, including foreign trades, consumer consumption, and real estate. And I think that the only thing that was worth expecting is real estate. So we're expecting like more stimulus packages or policy loosening, regulation policy loosening for real estate to emerge this year, and we think there are more to come.
Stewart?
I have no more comment to make. I agree with what he's just said.
Barry, final word to you. I just want to get your quick thoughts on the World Bank warning yesterday that the global economy is in danger of suffering what they called a lost decade of growth, which they say will be even more severe if the current financial turmoil sparked a global recession. In new research, the World Bank said the COVID-19 pandemic and Russia's invasion of Ukraine were set to create lasting damage to economic performance, which is going to undermine efforts to improve global living standards, reduce poverty and address climate change. What do you make of that, Barry?
Nonsense. I think that it's grossly too pessimistic. It's just not going to happen. Look, they are an organization that increasingly is using its clients in Africa, Latin America, and the poor parts of Asia, and to be their spokesman. If the Ukraine war goes badly, yes, they could be right. If the global economy falls into recession, yes, they can be right. But to say that a decade of lost growth is ahead of us, I think that is just sheer nonsense.
Okay, well, that's a good way to end. I think
we're all on the same page as far as the World Bank is concerned.
They do have this reputation of being very pessimistic, don't they? But thank you very much for your thoughts there. You heard our US economics correspondent, writer and broadcaster Barry Wood, who's over in Washington, D.C., James Wong, who's Chief Executive Officer at Cathaysia Securities, and Asian Fund Management Industry Consultant Stewart Aldcroft. Thank you for listening this morning. I hope you found the discussion informative. I'll be back tomorrow morning with more Money Talk, and I'm going to be joined by personal wealth advisor Enzio von Pfahl, Sunil Kashyap, who's director of FinMet, and then with a view from Japan is Tokyo-based journalist and author William Pesic. Hope to catch up with you then.
Money Talk